Welcome to the Asset Revolution podcast, where each week your hosts from Arbor Digital provide educational opportunities for financial advisors and individual investors to gain knowledge in this emerging powerhouse that is digital asset investing. The Asset Revolution podcast is your connection to the future of digital assets and an opportunity for anyone to get off zero. Let's dive in. Alrighty, everybody, welcome back to the Asset Revolution podcast, where we dive into what's going on behind the scenes and help demystify the digital asset space for professionals and investors alike. With me today, I'm so excited to have on the podcast is Marco Manoppo, and please forgive me, Marco, if I mispronounce a little bit. We have been looking forward to having you on since the genesis of a relationship that we started probably about a year ago. But before we dive into that, Marco, welcome to the show. Thank you for being here.
Thank you so much for having me.
Yeah. So as I mentioned, there's a relationship. So the company you work for is Digital Asset Research. So Marco, you serve as an analyst and I think there's a lot of hats you wear, and we'll get into that. But there's been a partnership between us. So full disclosure at the beginning of this episode, everybody, Digital Asset Research is a paid partnership that we have with them where we utilize their digital asset research and analysis reports and clean pricing data, which they have through their offer. And there's so much more that we're going to get into and what we do together. But just full disclosure that relationship does exist. So anything we talk about today is not financial advice. You've heard the disclosures already. But with that out of the way, Marco, first thing we always like to do on this show is just have you introduce yourself, tell us a little bit about yourself, and maybe a little bit about your crypto journey.
Yeah. So again, thanks for having me. It's nice to finally be here, Mark. So I guess a little bit about myself. I went into the crypto space, I would say late 2016. So it's been a while, 5 or 6 years. Back then, I was an undergraduate. I was interested in basically the markets first and foremost. I was using Robinhood in 2015 before all of the meme stocks mania, and that slowly got me into the market. And one of my friends told me about crypto assets in general in late 2016. That's how I got into it. To cut the long story short, yeah, I graduated. I decided to find a full-time job in the crypto space. I work almost a year at a crypto hedge fund out of San Diego, and then I've been with DAR for the past 2.5 years or so.
Wow. Okay. So a couple of things I want to highlight here, because I think this is going to be really fascinating. This is going to be a first for the show. You're going to be the first professional we've had on the show to where you went straight from college into the crypto industry. There was no TradFi or traditional job in between then. And I think it's really important to stop there for a second. I would love to just hear more of your thinking as you were going through college and undergrad, and as you were making that transition into the working world, because there's a new generation that is more tech savvy, more tech forward. They're very interested in blockchain. We've seen all the data and all the surveys that have been coming out more and more with millennials, Gen Z, and the future generations. 60-70% are going to be engaged or invest in crypto in some a meaningful way, and it sounds like you're a part of that. So tell us a little bit about that. What was the thinking as you were going through undergrad?
Yeah, so I guess to provide a little bit more context, by degree, I was an industrial engineer. So it's one of those degree that I would say, when like people think of engineers, they would probably think of like, oh, you're a software engineer or you're a mechanical engineer. Industrial is a little bit unknown to some people, but at the same time, it also offers like this nice balance of both the tech, the econ side, the business side. It's a lot more broad. And I think that kind of helped me decide throughout the years that, that I wanted to be involved in the market more than, let's say, a more conventional industrial engineering job. Perhaps, like you would be managing a factory in the Midwest for Kimberly-Clark or something like that, right? I have decided that I wanted to use the operations research and a lot of the knowledge that I learned there for the markets. And I've realized that actually a lot of people that were perhaps in that degree, but studied it in let's say in New York instead, that they were actually exposed into using some of the learnings that they've had for the capital markets. But to cut the story long, to cut the story short, basically decided that I wanted to test the water despite the bear market. And just to
Mm-hmm.
add a little bit more context, I guess I finished school around late 2018, so at the bottom of the bear market, literally at the bottom of the bear market. And I decided that if not now, when else, right? So
Mm-hmm.
it's one of those moments that I think when I look back, I perhaps both have the privilege and the courage to take risk while I'm young. And I was thinking that worst case scenario, if this all goes to zero in 3 years, I can get a job somewhere else.
Wow. Yeah, a very rational, very methodical approach. I like what you said there, understanding how you have the privilege to be able to take that risk, and then also having the courage, the two very important words there, to take that leap. Because I think one thing that we are seeing in this space overall is just the immense amount of talent that is flooding into this space. Not just new, not just old talent. I think we talk a lot, and I sometimes get caught in this, is where we talk about all of the old talent that, and when I say old, I don't mean age or anything like that, just people who have already
Right.
had experience coming into the space. But we tend to forget the new age, the next generation of workers who are graduating over the last 3, 4, 5 years and moving forward. They're all excited about this. And when we talk about kind of making what we want into a reality, having that talent come in is really important to understand. So I hope if you're listening to this, talent's coming, talent's going to stay coming. And, Marco is living proof of that. So I want to transition now. So let's go in a little bit. So let's talk a little bit now. So you worked for his crypto hedge fund in San Diego, but are you based in San Diego? Is that where you are now?
No, I am currently actually based in Asia. I would prefer not to disclose the exact location, but yes, I am currently based in Asia. But I was basically in the States for the last 7 to 8 years.
Perfect, and
Yeah.
totally fine. Okay, wonderful. So let's now get into where we are now. So let's talk about digital asset research. Take us through a little bit of what digital asset is, what digital asset research. We've had Doug, the CEO, on the podcast before, so shout
Right.
out Doug. Thanks for bringing Mark, giving us Marco, lending him to us. But talk to us a little bit about your day to day at Digital Asset. What do you do there? What's kind of your responsibility?
Yeah, so wow. I mean, I guess kind of like all startups, people wear a lot of hats. I started, as you said at the beginning of this call, as a research analyst. In the past, I would say 7 to 8 months, I'm practically the head of research, and I'm helping both our developer teams as well as our analysts and product people, basically marketing people, every department on how we can produce quality research, not only for our data, but perhaps for even the more qualitative consumption. So that is content for marketing, content for growth, as well as for our existing clients. So I would say my day to day varies a lot depending on the month. Sometimes there's a lot of work that we do as a data provider for index providers. So there's a lot of rebalancing work that we do every quarter. There's also a lot of work that just goes into all the different kinds of our products that you can see on our website. So whether that's taxonomy, pricing, calendar, whatever, a lot of that before any updates or any technical work can be done, I have to make sure that everything research-wise that goes into it is in a tip-top condition, basically.
Mhm.
So I would say something that goes aligned with that is definitely I just need to keep up with everything that is happening in this crazy world on like a daily basis, because I do have to actually know not only what perhaps what only that the legacy financial companies would want to know, but what is happening at the forefront of DeFi
Mhm.
innovation. Let's say like what is happening with permissionless lending, what is happening with some crazy rebase token combined with some NFT mechanics. I
Yep.
need to know both end of the spectrum to sort of like help the company, basically.
Yeah. And I like the way you presented that. You say you have these two ends of the spectrum, right? You have this traditional world that you have to also cater to, but then you also have the new world, which is the digital asset / crypto world, where from a data and research standpoint, you have to know both, and that's really hard. And that's where one of the things that we appreciate about the team is over at Digital Asset Research is that there's a very robust team with you at the helm of it and others there that we've met through the process. Going through that because I feel you on that. One of the things at Arbor Digital, one of the things we've seen as not a problem but a constraint, a limitation for us is that we're a small team too. We're a startup, and I think any investment manager in the space, any asset manager, whether it's a crypto hedge fund or if it's an SMA like us, if you're not employing a team on top of your team on top of your team for data research analysis, it's why we have 6 partners, right? We don't just have 1 or 2. You kind of need that because there's this big spectrum that you have to be on and 24/7. And then you also have to understand how they're all connecting together. And I think that's the process where everyone's trying to figure out, okay, what are the relationships between everything that lie on this spectrum, which is really hard to do.
I would, I would even add, sorry, I would even add that unlike back in 2017 or 2018, you would need way more people now because of the level of details that every little subsector or niches that came out in the past 2 years. There wasn't any DeFi in 2018, so you can have, like, if you are a big investment manager, it's fine for you to have 1 or 2 or 3 people that focus on crypto while everybody else focus on fixed income bonds, equities, or whatsoever, and that's enough. Now, those who understand NFT might not fully understand DeFi. Those who understand DeFi might not understand what is going on with the modular blockchain. It's so niche now.
Absolutely. And it's interesting because, we live in a space, we're in the traditional world, very regulated. And, the only toes that people want to put in the water are the Bitcoin toes, right? They're only willing to start learning. So they develop an investment thesis, they start researching. But for us, with what we do, and that's kind of what differentiates us, is this space is so much bigger than just Bitcoin. And if you really want to understand, I actually feel like in order to truly understand Bitcoin and the technology and the network of Bitcoin, you actually have to understand all of these other things that are happening, all these little niches that are being built, because they all stem from what was started with Bitcoin. And I think I'm already getting ahead of myself. So anyway, I'm super pumped because the topic and really what we're going to dive into is really the truth about tokens. And really, that's a question we get a lot is, what's the difference between a coin, a token, a currency? Like, how the heck do I separate all of this? Right. And that's kind of something you all have helped us with and continue to help us with on an ongoing basis. So let's dive into that now. Let's kind of go into that. So take us through a little bit about how do you guys think about the origins of where did it all come from?
Yeah, so I guess first and foremost, perhaps on the terms itself, that's not really something that we, some people would argue, oh, this is called a coin, this is called a token, this is called a digital asset. But I think in general, we understand what we mean by tokens here. So some of the ways that we have been thinking about this, and I've been thinking about it also, as the year goes by, the nature of token itself changes a lot. I would say back in 2015, 2016, or even before I knew about the existence of the space, tokens are just digital currency. It's just Bitcoin. It's just something that you use to transact with one another to claim that there is some sort of value here, but there's no there wasn't any smart contracts. There wasn't any, I would say, fancy functions that you can build on top of it. It's just simply a currency on the internet. And then I think as the year goes by, that really changes with what a lot of people would attribute it to Ethereum. In 2014, 2015, they launched, and Vitalik thought that, hey, what if we build smart contracts and actually build computers on the blockchain technically? And that opens a whole array of possibilities on how one can think about token itself. I think at the very basic layer there, in what these days are called as layer 1 tokens, the tokens that are associated to the underlying blockchains itself, Ethereum, your AVAX, your Solana, these tokens are, it's interesting, I would say, these types of tokens are perhaps the most difficult to assess, because some would argue they kind of act like a commodity with like these gas fees and all of that. At the same time, they also accrues fee. Should we think about them in a network effect kind of capacity? There, I don't think anybody has truly claimed that they have found the best way to value it, but a lot of work have been done by a lot of smart people, a lot of brilliant people into different frameworks how we can think about layer one tokens. And this even gets more complicated, and it's a good segue as a lot of decentralized applications or dApps are being built on top of these layer one tokens. Then there are a completely separate but still connected, I would say, ecosystem of these DeFi ecosystem in Ethereum, DeFi ecosystem in Solana, DeFi ecosystem in other chains. How does this ecosystem, I guess, accrues value back to like the layer one token itself, or is it completely separate? Should the application worth more than the underlying layer one token? There's a lot of discussions there, and I think what is very interesting in the last part here, as a lot of dApps are being built, the use cases of the tokens that are associated to these dApps themselves have been growing. I think we saw in 2017, 2018, there were a lot of what I would call as utility tokens. So there was no concept of governance. It's just, oh, here is a token that is connected to a product or a protocol that we have, and you might be able to use them for X, Y, Z. I would say they're kind of similar to like airline miles in a sense, but perhaps like tokenized. There's no governance that you can do by having these miles per se. It's just something that you use that is connected to that product or that protocol. And then I would say in 2020, after the boom of DeFi with Compound and Uniswap and everything else, the whole concept of governance token reemerged to the broader crypto ecosystem, and folks and builders and investors are thinking of how can we actually decentralize and allows the token holders to have a say in what is going on with the protocol itself. But then again, of course, I know we would be talking a lot about this. That opens a whole kind of worms, and there's like a whole debate about, do I actually own something, or is this like a useless governance token? There's a lot of discussions there.
Yeah, absolutely. And there's so many different dynamics at play right now, especially from a regulatory standpoint. I think one of the biggest things everyone's trying to figure out, and kind of what's keeping a lot of capital on the sidelines, is this classification of, are these things quote unquote securities, right? Do they meet or pass the Howey test? And obviously one of our lines that you'll hear for a lot from Matt Kolesky, who is our, one of the founders of Arbor Digital, is a lot of these things are probably going to get settled in the courts, just like the Howey test was. And while that's to be seen, what we do know is that there are some security-like characteristics within these tokens and governance tokens and utility tokens, but then there are other characteristics that would make it fail the Howey test. So you can't box it in right now, and then that's a struggle, and it's a struggle for regulators to understand, how do we come regulate this if we can't come in and unequivocally say. And again, there's some other things happening in terms of the courts right now with some other projects, but we won't dive into that. So we know that there's so much more to happen here in terms of classification, but it's still fascinating to see everything that the use case evolution, how people are classifying, defining them until that point. And so that's where you have the emergence of these governance tokens. And I think the easiest way to help people understand what is a governance token, just think of it like, if when you own traditional equities, you have voting rights, or if you have preferred stock or anything, it's very similar. And, you can structure that and you can engineer that in many different ways within that security. If you own one share, you can have XYZ many, voting rights when it comes to it. And then you can delegate that, all those things. So Marco, can you talk a little bit, what's different then about a governance token than, somebody comes in and says, well, that just sounds like voting rights. So how would you help them differentiate the token from, like a security, like a traditional equity?
Yeah, no, that's a very good question. I think first and foremost, what most people need to understand, that a lot of projects claim that our token is a governance token, but you actually really need to look under the code whether the governance that they claim you have is reflected on chain, or is it still something that the team or the large majority of the holders, the shareholders, they don't like it if you use the word shareholders, but the teams and the investors have
Token holders.
control over, right? or the token holders have control over. So I think to talk further about this, it's a lot better if we use a real example. In the Uniswap's case, currently, I think as of the time of recording, there is a proposal to turn on the fee switch, which is something that a lot of people have talked about before. Maybe just to take a step back a bit, I don't want to make the podcast about Uniswap, but a lot of the
Okay.
automated market makers or a lot of decentralized exchanges these days, they charge fees for traders to use their platform, but all of those fees go to the liquidity providers. So the exchange or the team or the protocol behind it are not getting anything. It all goes to the liquidity provider. So a lot of the token holders then become like, oh, then what is the use case of our token? One of the long-standing arguments for Uniswap, which is one of the oldest and the OG DeFi protocol, is that yeah, this will give you the rights to eventually change some of the parameters and the way that the protocol works. So a lot of them was it's like, okay, then let us change it and add a fee switch, because a lot of your competitors, the smaller ones, the forks on other chains, have done this, and there's actually a real cash flow going back to token holders as a result of that. Now, we still don't know what's the result of this proposal, whether they're actually going to do it, if they have enough votes. All of that is the different dynamics that one need to pay attention to when you read that a token has a governance, that a token provides the governance power to the token holders. Can this actually be enforceable? Some projects actually allow you to do it on a code-based level, so no matter what happens, the changes would have been made. I need to read again how it's going to happen with this one.
No, and I like that you brought up a real life example, because that is definitely something that we are paying attention to, especially when it comes to Uniswap. And full disclosure, we do hold a position within our Compass portfolio. And it's kind of an example, and I think that really helps people understand, okay, this is what people, we're doing with these tokens. And this is where we talk a lot about this when we have investors is, this is what they're used for currently. But really what you are participating in is the future of what these will do of what they will do in the future, and what can be baked into being a holder. And that's where you want to invest in projects that are going to keep iterating, keep innovating, keep evolving, but are actually providing some value and some service. And Uniswap is a great way to do that. So yeah, it'll be interesting to see, flipping the fee switch on. I think another reason for that is because a lot of, especially investors or, institutions, they want to be able to apply a lot of their, valuation methodologies that they're used to, like discounted cash flows, all of those things. And if you turn on that fee switch, that's going to make that a lot easier, because you can actually say, okay, if I own Uniswap, I now can model this out that, the protocol now has whatever XYZ thing that they're baking in for token. It's not just I have the right to vote on something, which is currently what it is now. So it's really the way we explain it is, and especially in the case of Uniswap, is when you own Uniswap, you're more, what is the value of being able to change the network? That's the big thing. Do you think that's valuable? And if you do, you should hold it and actively engage with it, right? And you can delegate your voting rights or your governance rights.
That's a really good point. Yep.
Right. And that's really and that's a lot of these, and that's where it's been interesting to see the evolution of, the dApp tokens as well as the layer ones, and then how they all work together. So take us through a little bit now. Let's start using that to dovetail into kind of what do you see as interesting ways people are modeling, or what's sustainable? What do the experiments look like? We just talked about Uniswap's kind of experiment that they're going to do with the fee switch. What else are you seeing
in terms of token use cases?
Yeah, like how other projects are experimenting, maybe more methods to take value and accrue it back to token holders, and not just to those that are actively using, like liquidity providers and of the sort.
Yeah, so I I think in general there are two ways that protocols are experimenting with. So the fee switch can be classified as a revenue share mechanics, right? It's basically sharing parts of the um, income or the cash flow that the protocol has, and
Mhm.
depending on whether you are just an automated market maker or if you are a CLOB type DEX, or if you are an on-chain derivatives, as long as you provide some sort of service in which people are actually paying to use it and then they share it back to the token holders, that is one dominant theme that we are seeing in the market right now. Whether it's a good thing or a bad thing, the fact that we are seeing, it seems that more, I would say, more pseudonymous founders are taking riskier steps to do that, which is, I guess, like a bit obvious in retrospect. But that is one common theme that we are seeing. The second one is what I would say, um, it's the Helium model. It's the HNT. So I guess, like, without really going too
Yeah, give
deep
us a
on,
high level. What's Helium? We've talked about
yeah,
it on other
right.
episodes, but give a quick brief rundown. What's Helium?
Right, perhaps I'm not even the best person to do that, but a brief rundown is that they sell this hardware in which, if you purchase it and you, it's almost like running a node or running that hardware. Basically, you would be creating a network of decentralized Wi-Fi. Basically, it's
A decentralized hotspot, if you will, right?
hotspot. Yeah,
Yeah.
it's a decentralized hotspot. Hotspots, and you can read about it on their own website about some things that they're claiming to actually do. But perhaps to take a step back a bit, the second concept that I wanted to explain here is that um, a lot of projects do either some sort of buyback, or that they would uh, design the tokenomics in a way that it would increase the value of the underlying token. So that is either you would have to acquire it in order to run something, or there's some sort of buyback, or if there's some sort of burn, but you would create a function or a mechanic to try and increase the value of the token. And then because of the percentage of ownership that they have, whether through it's part of the reserves or part of the treasury, then they can sell that and sort of book that as a profit. Now that is also like I would say, a tricky area. Some people think that's fine. Some people would argue that that kind of defeats the whole purpose. I think though, like the important point that we want to note here is that these are the two dominant mechanics that projects are doing for non-layer one assets.
Yep.
Again, for the layer one assets, for Ethereum, for AVAX, it's completely different in how they work. For the application layer projects, for all of these dApps, they either do some sort of rev share or they create a mechanic that would constrict the supply of the token and make it more valuable and more rare. And then they can book some profits or some runways by selling the token that the team or the treasury reserves internally have.
Mm-hmm. So, and this is where, if you are listening and this is kind of going deeper into the weeds, then you've gone before. That's kind of what we're doing. We hopefully are opening your minds to really what's happening behind this, and so much innovation, so much experimentation. And this is why it takes a full team on a team on a team, and then to be paying attention as much as you can. So now that we've level set, Marco, let's now go into a little bit more. We've talked a little bit, and I guess even just to go back a little bit to, I made this analogy where, you right now, currently, before these mechanisms that are being built in on the dApps, really these governance tokens, you really, what is ownership of participating in the future of that network, value to you? And the way I would help you, anybody listening, make a connection here is, let's say you're a Google engineer, right? Let's say you're looking at Google before they were a public company. Let's say, what would you have valued the ability to change Google's algorithm for how you searched on the internet? What would that be worth? And today, everyone would look like, oh my gosh, I would pay so much money for that. If I could participate in that and own that, like, no cash flow, no nothing, get rid of all that stuff. I
Yep.
think everyone would unequivocally say, yes, I will buy some of that. However you value, I don't even know how you value that because you can't. It's so hard to value. How do you value an algorithm like that? So I use that as an analogy because it's one that helped me and what we've talked about internally. Why would you even own this then if there's only this governance aspect to it? And that's why, because you're still so early and at the creation and innovation phases of these. This is so far from being a mature part, both on the base layers as well as the DApp layer, and the layers being built on top of that, and side chains, multi chains,
Right.
on all these other areas. That's why you would, because it's worth it. It's very much, there's a value to being able to have an impact on the future of that network and how it's governed and what gets done on those networks. And that's where we've now talked a little bit about, we've level set kind of these other mechanisms that are being built into now ownership of these tokens, which again are going to, there's going to be some battles and there's going to be some short-term probably pain, as we, go with regulators on this journey. And as regulators come with us on this innovation journey. So let's talk, do you have any other examples then to maybe let's talk, we've talked about governance tokens. Let's now, and we talked about Helium. Would you classify Helium as a utility token? So HNT, how would you classify that?
I think it's a little bit challenging for Helium because if I'm not mistaken, and I have to double check this, but they are transitioning, if not already, is their own chain. So they're no longer, I would say, just a utility token. In fact, perhaps it's like a good segue, but a lot of projects have been pondering or if there's a benefit of becoming like its own chain. It's more of like an app chain thesis. At some point, at some scale.
And right now they operate on top of a chain, is what you're saying.
Not for Helium. I have to double check that.
That's okay, but other dApps, they're operating on top of another chain, correct? Yeah. Okay.
Yes, there are dApps that are operating, let's say, on top of Ethereum, like DYDX, that have openly stated they are considering building their own chain. So that is also a trend that we are seeing, and that's a completely separate conversation. But that would make it even trickier to sort of classify what kind of tokens are you? Like, are you just utility? Are you utility plus governance plus layer one?
Yep.
So
let's talk about that, because I think that goes into some of the challenges. I definitely love to dive more into the challenges of investing in this space. This is really a lot of the value that any asset manager really in this space provides. Those who have taken the deep dives and understand the complexity, understand the big challenges. And while we talk a lot about what's great and how we're innovating and all these new things that are coming, we have to look at the other side. And so take us through, what do you guys see as some of the challenges that investors are facing when going into these tokens?
I think it's definitely assessing the risks that are associated with the tokens, because unlike regulated markets, traditional equities, in general, it's pretty clear. Well, like I would say for US equities, all of the filings, all of the rules are pretty clear. You know what you're buying. For emerging market equities, it might be a little bit more tricky too. But I would say that's a good analogy to think about why it's difficult for investors to assess some of these tokens. Imagine it's a way more obscure emerging markets in which there's no centralized source in which you can get all of your information from. You have to scour the website, the documentations, Discord, Twitter, and even that is just for one project. You have to, and then unlike a typical company, you would need to look at it. Okay, now that I've understood perhaps the operational risks that are associated with the team and the founders and the investors, what about the code risk? There's a lot of hacks in the past year, and some of these biggest hacks, these projects were backed by notable investment funds, right? So, or like by notable venture capitalists. So it's not always that easy to look at the attack vectors and think that, oh, even though it's audited, there's there's no guarantee that it's
Hmm.
perfect and it's tested. I think in general, the interdisciplinary nature of the asset class itself is what makes it difficult. So it's you have to understand finance and how it's going to accrue values, what kind of value it's actually going to produce. You have to understand product and tech, especially as you know, in the past 2 years, the whole thesis is like Web3. It's not just crypto, right? So
Hmm.
how do you see network effects? How do one, I guess, like equate social media in Web 2 with Web 3? You have to understand product and startups landscape, and then you have to understand the code base also and the smart contracts, any risks that are associated with the codes. And last but not least, I would even say the level of decentralization is there any is there any is there
Hmm.
any entity that can actually control this asset? There's just a bunch of different vectors that one needs to look at.
Oh man, see this is part of the value of this episode that I was really excited to get into, because I mean you're nailing a lot of different things. The word interdisciplinary is something we use a lot here, and when we talk about what our limitations are, right? Like, so Arbor, we're traditional financial professionals, right? Some of us came from the asset management, wealth management side. And so what we understand is our limitations, and why we have so many partners is because we understand that there's so many other disciplines you need to be very in tune with to be able to really look at a white paper, or look at a blockchain's transactions, or look at the ownership statistics, or look at other metrics, when you're doing our team fundamental analysis on the team, and the protocol itself, and understanding all these things. There's no possible way to where, if you are just a team of one or two people who come from one discipline, that you're going to be able to actually understand enough to where you can be comfortable to say, I'm going to throw some dollars at this. And
Yep.
that's why we have six different partners with this, with, our main partnership together with y'all over at Digital Asset Research, is understanding you need the engineers, you need the tech people, you need the software engineers, you need and also the crypto native people who understand the ideas and concepts of composability, decentralization,
Yep.
open source, because there's a lot of history there that has nothing to do with finance that you need to understand. Because and the way we like to say is, like, when you're analyzing these things, and maybe you can speak to this a little bit, when you're in traditional world, you have all these standards that are already set. When
Yep.
if I hired 6 analysts right now, I have a template and a blueprint to say, okay, you're going to go look at this, this, and this, and you're going to report back to me on those findings within these frameworks. Easy peasy. None of that exists right now with
Right.
the crypto side,
Right.
and networks and protocols. And we can take what we've learned with traditional networks, like phone networks, internet networks, and things that we've learned from the first two iterations of the internet, Web 1 and Web 2, and now that we're heading into this Web 3 world. But it's just so hard to now make connections between all of that. and
Absolutely.
and that's kind of the challenge of what we find. And there's just so much complexity. And then you put on top of that, probably 24/7 mark. These are 24/7. No one ever sleeps. So I don't know, anything to add to that, or what are you guys seeing? Anything else? What do you got for me there?
I think what I like, and I think you made a really good point there, is the crypto native involvement.
Mm-hmm.
That is definitely one thing that I have seen throughout the years, as the landscape matures, and people, whether from traditional big finance or big tech, are starting to enter the space. They became aware of the existence of people that have been in crypto since like 2014,
Mm-hmm.
that really knows what is going on in the weeds. And
Yep.
I know it's this taking a step back a bit, but even I feel like I'm like a dinosaur sometimes, because I've been around
Yep.
since 2017, 2016. And you would see these like NFT kits that came in the past 2 years, and they're like really masters of their domains. It is crazy to see.
Mm-hmm.
So yeah, like understanding all of the rehypothecation that might happen between all of these different protocols and the risks that are associated with it, and how are you gonna search for the information? Where's the fastest information flow? Because like, for crypto, it's not Bloomberg, right? It's not that's not where the network of information. If you want to stay on top of what is happening with different protocols, with the conversations, with the sentiment, with the narratives. There's a bunch of different, I would say, crypto slash digital native source that are very different to your traditional tools and in the equities market. Let's say. So I think you nailed a really good point there.
Yeah. And so I'd like to talk a little bit now to end off in our last section here is a little bit, we utilize you guys for many things. And I think one of the innovative ways that we see in terms of measuring and different types of metrics is this idea of decentralization. And when we're doing our fundamental analysis, one of the things we're always questioning is, okay, you have this protocol, you have this team who's saying we're going to build this thing that's going to be better than this other thing that was built, a couple years before us, and we're actually going to be decentralized. We're actually going to be open source. So I think, especially when you have protocols and networks who are, and that's part of the ethos of this space, saying that, one of the major things we need to do is actually say, are they actually decentralized? Because I think that's one of the big misnomers of this is,
Yep.
And one of the best ways we've utilized a lot of the, innovative, something we would have never thought of because we don't think about that in the traditional world, in the traditional financial world, is these kind of decentralization measures. So can you talk a little bit about some of those decentralization measures and, why you guys include those on your reports?
Yeah, as part of our asset vetting work, we do analyze the level of decentralization of different tokens, and there are, I would say, quantitative and qualitative ways in which we are thinking about this. The quantitative way, to put it in essence, is we really take a look at the blockchain and the on-chain transactions level of the token itself, or whether it's a standalone application layer token on Ethereum, or whether it's a token that is associated with a blockchain. We would take a look at their level of activities and use different data science metrics and stats that our quants are basically working on to portray quantitative metrics in which at least it can provide a comparison of one network compared to another network. Now, people can argue, like if you are people can argue if network A is sufficiently decentralized compared to network B, but having that quantitative metrics that assess the same data point and then present it can at least provide a high level sense of whether this network is more decentralized than that network. That is on the quantitative side. On the qualitative side, which is also not purely qualitative, but I would say it's slightly more qualitative, we can take a look at the validators. We can take a look at all of these. We can take a look at the consensus level, at the client diversity. There are a bunch of qualitative metrics that can be drawn out from analyzing still the underlying blockchain itself, because that's where all of the informations are. And in general, this is, I would say, it's an ongoing work that we would always develop, of course, because it's something that you made a really good point, how protocols would start and then they would say we would eventually decentralize after we have built this, right? And then we need proof to see that they're actually doing that. At the same time, these protocols tend to argue if we decentralize too fast, we wouldn't be able to execute on the things that we want to execute. So and of course, the way that we're looking at it is also different when we're looking at application layer tokens, or all of these DeFi tokens, compared to layer one tokens on your Solana, your Ethereum, because at the application layer, a lot of the decentralization is not only the activity, but also it's almost like ownership, right? If one entity owns 80% of some DeFi token and can change the fees within one night, and then no one knows, and accidentally the bots that you've been running for months are now getting charged 5% for like every transaction, that's not a good thing. So yeah, it's an ongoing work, but in general, quantitative, looking at the underlying blockchain data, and qualitative, drawing out the different factors that go into the underlying blockchain itself.
Yeah, and I like to say that, in traditional worlds, because again, I'm a big learner, right? So I love doing designation programs. I love learning more about kind of where things come from, so that way it can help me inform what I do today and how I look towards the future. And just the academic research and the science has been applied in the traditional world for, decades and hundreds of years in terms of monetary policies, in terms of
Right,
economics,
right.
in terms of financial, analysis, all of those things. So all those standards are built, like you mentioned at the beginning. A lot of the things in the traditional world have already been built, battle tested, and those are pretty clear. What we're developing now are new metrics and new factors to implement into models for these new types of assets or these new types of tokens um, that are going to be the new standards in this new world, in this Web3 world. And the work that you are doing now is basically a part of that. So anybody in this space right now, which is why I encourage anybody listening, if you are doing work in this space, keep going, no matter how many people tell you not to, because you are actually helping create the standards that will be used in the future. And the only way we get there is one, we can't control is time, right? We have to go through time. We don't have hundreds of years to go back on in terms of data. But the one thing I will say is because we are in the generation we are in now, we're going to have so much more data to inform the standards that are going to be built over the next 5 to 10 years. These will be the highest quality standards that I will think you have ever seen in financial markets.
Exactly. I would add on to that by the fact that everything in this asset class is open source, or at least people are gearing towards transparency. So
Mm-hmm.
the level of data flow, the level of data availability that you can get in this asset class, I would say is stronger because it's not paywall, it's not behind some sort of centralized parties ownership, but everything is out there. So the level of data running around is just massive.
Mm-hmm. Well, and I think that is also an issue, especially right now. And one of the things that we've came into when we were building out our investment thesis and our methodology of our portfolios before we launched was, oh my gosh, like there's just there's so much information out there, but nobody has really figured out how to synthesize all of that, bring it all together, synthesize it into actionable, not advice, but actionable decision making, right? And that's really the struggle we had at the beginning. So again, a lot of the work that went into prior was, okay, we at least have to have a framework. We have to have a decision-making process, and we have to have a process of aggregating all of this data. And we have to have a process of what does all this data mean and discerning that data. And that's an ongoing process. So while we did feel very comfortable to launch and we have a base set, I think it's really important that we get partners who are also willing to work with us to elevate those standards and elevate those models that we started with, but now with the evolution of the space, we can keep iterating. And that's something I think you guys are very passionate about as well. So can you talk a little bit about just that type of ethos and culture? Is that a part of what you guys do at Digital Asset Research?
Yeah, so our tagline is pretty much clean data. We want to make sure that we are able to provide um, and we are able to provide data and information in this very, very messy world in a succinct and clean manner, right?
Mm-hmm.
As we have just said, there are a lot of data out there, and but no one has really done the work to either ensure that the data is of high quality
Mm-hmm.
or that the data is somehow useful for or insightful in some sort of manner. So we are continuously keeping track of all of the different parts of the ecosystem that is happening, thinking of new ways to make sure that our data is as of highest quality, both quantitative method and qualitative method. And of course, that depends whether it's pricing, whether it's volume, whether that's taxonomy. These are all different, and we need different approach to each and every single one of them. But we do believe that as the industry matures and the number of institutions that are entering the space increase, the number of institutional quality products increase, there is going to be an increasing need for clean data,
Mm-hmm.
for clean information that people can use to actually build products and get crypto maybe eventually in 5, 10 years and a couple of trillion market caps, right? So that is the belief that we have, is that as a company we need to make sure that we can collect and provide clean data to advance the ecosystem forward.
Well, Marco, the solutions you guys have were obviously very in line with kind of what we need, right? Being able to be that interdisciplinary research arm for us, along with some of the other partners that we use to really deliver on, helping us asset vet, right? These digital assets, vetting them, understanding the dynamics between the different layers, the different dApps, and the different what should I say, metrics that we have now with all of this data, understanding how we even just discern that and helping us have this process of discerning and coming to conclusions on that data is really important. And that's something that what we utilize our relationship for. And then I think you just nailed the last piece on the important solution for us is clean pricing, right? Clean. If the saying here is garbage in, garbage out, right? If you have garbage coming in, you're just going to get output that's garbage as well. So part of our fiduciary responsibility is ensuring that we aren't just taking in garbage, right? We're not just going to these public places to where there's just a bunch of bad data, and we need clean data in order to make sound decisions when we're, investing or doing any type of due diligence on network. So I want to say just thank you to the team. It's, you guys are obviously developing a lot of different things there on a daily basis, and being successful as well. So we're happy to be a part of that journey with y'all. But we're coming up on time. I don't want to take up any more. Before we kind of get into some quick fire questions, I always like to do with all the guests. Is there anything else you want to add? Any other pieces that you want to kind of take into maybe about what y'all are doing over at Digital Asset Research?
I think in general, we have covered almost all the topics. I would also likewise would want to say thank you for I think what's really awesome about this podcast and the effort that you're doing is education. That is one thing that is still missing in the space very, very much. So thank you for doing this. This is awesome. Yeah.
Yeah. Well, thank you. You're part of it now. So we're in it together. So let's do this. I always like to do these quick fire questions at the end, just to, again, and maybe a couple of words or maybe a one-line phrase, just what word first comes into your head. Okay. Okay. What's a learning you've taken from childhood into what you do on a daily basis today?
This is harder than I thought. Adaptability. Making sure that when you think about a process, whether that's in crypto or like everything else, you have to adapt to what is going on as the world develops, I would say.
Love it. What is something that crypto detractors get right?
Again, I know I'm breaking rules, but I hope the detractors that are focusing on so there are different types of detractors, and I think the one that is somewhat right is the one that criticized the fact that not everything needs to be tokenized. I think that is really, really on point. If what you're building is somehow more complicated because of the existence of tokens, you would have to think whether that is a solution trying to find a problem, right? You have to make sure that it's actually a real solution.
Oh my gosh, Marco, I love that answer. And that's something we espouse here is while we get excited about these new innovative ways to think about things, which is I think really what Web3 and crypto and digital assets really represent, because of the technology, it enables this whole new array of thinking and new array of outcomes. So the way we think about it here is, in our traditional worlds and in our current world, and this is innovation. This isn't anything new. This is how we progress as a species. We have a set way of outcomes we think everything can go towards. And then something new comes along that makes us open up. And now we have a whole new way and a whole new section of different pathways we can take to achieve elevated ways of thinking or elevated ways of solving the same problems. And that's really what this represents. But that doesn't mean everything needs to be solved that same way. So not everything needs to be decentralized. In fact, I would say there are some things that do need to be centralized. Not everything needs to be open source. Sometimes when you make everything open source, it does congest. It makes everything harder as opposed to being more efficient. The same thing here's that not everything needs to be tokenized. There are something, it's okay that that's not tokenized. So I really love that answer. That's a really good answer. And here, my last question here for you is, what is a resource that you would give to somebody who is just getting into the space? And it can't be this podcast.
Just getting into the space. limited capital markets knowledge, I would say the first thing that really came to mind, and this is mainly like a curation, but I think the folks at Blockworks did a good job at curating a lot of one-on-one articles. So I think they have like a website in which they curate different articles, not written by themselves, sometimes by a lot of people, but it provides a centralized repository for you to just read about everything else, about Bitcoin 101, smart contract 101. So I think that's a fairly good source.
Very cool. Well, thank you for going through those. Thank you for giving those genuine answers as well. We always love doing those little exercises. Man, Marco, it has been so fun to jam with you on tokens, on the interdisciplinary dynamics happening within the space. I'm sure if you're listening to this and you're walking away a little bit more confused, great. Come talk to us. We can dive into a little bit more, but also we hope you walked away with maybe a couple of different learnings and new ways to think about things. Marco, last thing, where can people find you? Where do people go to find out more of the work that y'all are doing over at Digital Asset Research?
Yeah, you can find us at digitalassetresearch.com, or on Twitter, we are at DAR_crypto, or on LinkedIn, you can just search for our name. Likewise, for my own personal name and Twitter, it's just my full name, at Marco Manoppo on Twitter and on LinkedIn.
Beautiful. Well, we'll put all those links in the show notes. Again, Marco, thank you so much for taking the time and energy, bringing your experience onto this podcast. I know a lot of people are going to really enjoy this.
Likewise, Mark. Thank you so much for your time.
Yeah. All right, everybody. Be sure to tell somebody today you care about them, and we'll see you next time on the Asset Revolution podcast. We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.
We are financial advisors. However, we are not your financial advisor. Unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or tax advice. If you have individual questions, please reach out.